Hey there, I'm Blake Buttram. This is Matt Minton. We're with Arkansas
What up?
Hey there, I'm Blake Buttram. This is Matt Minton. We're with Arkansas Retirement and Wealth. And one of the things that we want to talk about today is probably a question that I get asked by nearly everyone that I meet with that is entering into the retirement phase of their life. And that is, should I pay off my mortgage before retirement? It's not shocking to probably hear there's not a right or wrong answer for it. You know, it's not a yes or no, not black or white. But today we just kind of want to hit on some of the topics, some of the considerations, rather, that you should make when making that decision.
Yeah, and you know that the amount of times that we get asked that question has probably increased the last couple of years with interest rates. You know, now people are paying what 6.5%, 7% for a mortgage, and just a few short years ago in 2020, 2021, people were paying in the twos for a mortgage. So I think that people are self-aware of that number, and it worries them a little bit more
For
than
sure.
things did back
For
then.
sure.
And having less worry is one of the reasons that I think people want to pay off the mortgage. They're asking us that question because they're hoping that we're going to say yes 99% of the time.
Yeah, for sure.
They're hoping we say yes, pay it off. Because people naturally want to have less worry. They're worried about not having their home completely paid for and owning it in retirement when they're going to have less money coming in. They're worried about the interest rate that they have on the home. And a lot of times people are worried even if it is a lower interest rate. They just like feeling like they're going to have less expenses in retirement. Mm-hmm. And they know that if they pay off the home, then they're going to have lower expenses. Another big benefit of paying off the home is that you're paying less in interest. Obviously, you stop paying any interest on the note. But at the downside, we have to remember that the interest is wherever the money is. So whenever we pay off the mortgage, we stop getting interest for ourselves as well. So
you're taking it out of something.
Absolutely.
So whenever you take it out, you have to experience the loss of liquidity, the loss of the opportunity cost of that money. And like I said, it's different literally for everyone. But whenever you pull that money out, if it's in a CD or whatever, you're missing out on the interest that you're going to be making over that period of time. If it's in the market, you miss out on market growth for future years. So we have to take it a case-by-case basis, because I just keep going back to there's no right or wrong or there's no black and white answer just across the board. It's really a big consideration because most people's homes are their biggest asset, even when compared to their retirement accounts. It's their biggest asset that they have. Obviously the most expensive asset that they've ever purchased. It's not like buying a used vehicle. It's your home.
Right.
So, yeah.
Well, in the same principles, the same thought process that goes into your home, we'll do it for car purchases. I mean, like you mentioned, it's to a less scale.
Sure.
Because maybe it's $50,000 instead of $500,000. Yeah. But we do get the same question about cars. Should I go down there and finance this car, or should I just pay it off with cash?
Yeah.
And again, hate to sound like politicians, but it depends.
It does.
What's your risk tolerance? How are we going to be invested otherwise? How much are we going to make if we don't pay it off? Yeah. What's the interest rate going to be? What's our liquidity look like? So a lot of moving factors.
Mm-hmm. Yeah, I read a report today that the average interest rate on a 30-year mortgage had actually declined a little bit. It was like 6.56%. And just speak from my personal experience, whenever I bought my house, we had it was our second home, not our starter home, but then the second home, the one that we brought. Well, no, we didn't bring our daughter home too. But I was thinking we got in that whenever she was 3 or 4 months old, and sold it during COVID. Just like y'all heard the stories. We were one of them. We sold it in 12 hours for over asking, and just turned around and bought another home. And our mortgage rate is sub 3%. So one consideration to make is if you can make 5, 6, 7% average on your money. I know, at least in my instance, whenever I get closer to retirement, I'm 38 now, but whenever I get closer to retirement, that's a consideration that I'm going to have to make. Am I going to pay off my home? I told my wife that not to even look at other homes because we're dying there. At a 3% rate or sub 3% rate, Who knows if we'll ever see those rates again? A lot of mortgage analysts are saying probably not. But if you're making 5, 6, 7%, in like my case, it probably wouldn't make sense to cash that out and miss out on the market growth, the loss of liquidity, and all that just to pay down a debt at a very, very low interest rate. So
I wish I had about $10 million of debt at 2.6% right
absolutely, yeah,
now. And I mean that.
yeah, absolutely, yeah. So anyway, we appreciate you joining us today. If this is one of the questions that you have, if you are carrying a mortgage now and you are considering retiring within the next 2 to 5 years, this is something that Matt and I plan for and plan with all of our clients every single day. So please feel free to give us a call. This is one of the things that we discuss in our Pathway to Retirement. Do we have that? Let's show them what it looks like. So this right here, our Pathway to Retirement, it'll list out exactly what our recommendations would be for you. Now, granted, this is your money. We never tell people this is what you have to do. We just provide recommendations, and we can show you how the math backs that up. So hope you'll give us a chance to answer that question for you. Our phone number is 501-623-7066. And then you can also set up an appointment on our website, and that is retirearkansas.com. Thank you.